Welcome to this explainer. Today we're unpacking Palantir's incredibly pivotal May 4th, 2026 earnings report. We're not just going to analyze this stock in English, we're also going to learn the essential financial and tech vocabulary that's actively driving the market right now. So we're going to break down exactly how a company transitions from being just a basic data analytics tool into literally the fundamental operating system of the modern enterprise. Let's get right into it.
Okay, let's start things off with a totally staggering number. 127%. That is Palantir's recent efficiency score. Now, in the software industry, getting a score like this isn't just, getting an A+, it's practically breaking the grading curve altogether. It firmly sets the stage for what could be a massive inflection point in their upcoming earnings. But well, to really grasp why 127% is so jaw-dropping, we first need to look at what exactly is going down on May 4th.
Section 1. The Q1 2026 Catalyst, Preparing for May 4th Earnings.
So, we kick off our analysis by looking at the most immediate event on the horizon, which is Palantir's Q1 2026 earnings release. This report, it's absolutely crucial. It's going to prove whether the phenomenal growth they showed all through 2025 is actually sustainable, or if maybe the market has gotten a little ahead of itself. But before we get into the exact expectations, let's learn our first English tech and finance term for today: program of record. This is a highly coveted status in defense contracting. It essentially means a technology isn't just some pilot or a quick experiment. It is officially sanctioned and funded over the long haul within the U.S. military budget. And Palantir just snagged this status with Project Maven in March 2026. This grants them incredibly sticky government funding and the kind of revenue visibility that competitors simply cannot easily touch.
And that robust revenue visibility is exactly why Wall Street's expectations are absolutely sky high right now. Just look at these projections. Analysts are modeling a massive 74% total revenue surge year over year, hitting over $1.5 billion. But honestly, the real standout here? That's the U.S. commercial revenue, which is expected to surge by over 94%. I mean, that's nearly doubling year over year. Plus, adjusted earnings per share are expected to jump between 115 and 123%. These are definitely the kinds of numbers that demand your attention.
Section 2. Smashing the Rule of 40. Hypergrowth meets profitability.
Right. So beneath those massive revenue numbers lies how Palantir is fundamentally performing as a business. And that brings us to a crucial metric. In your next vocab check, the Rule of 40. This is basically the ultimate test for software as a service, or SaaS businesses. The rule states that for a healthy software company, its revenue growth rate plus its profit margin should equal 40% or more. Remember that 127% we talked about right at the beginning? Yeah, that's Palantir's score. A score of 127% doesn't just pass the test, it completely shatters it. It makes Palantir a highly efficient outlier in the large-cap tech sector, putting them in the exact same rare air as heavyweights like NVIDIA.
Furthermore, the company has now secured 13 consecutive quarters of GAAP profitability. For years, critics loved to call Palantir a story stock, claiming they'd never make any real money. Well, 13 quarters of actual standardized profitability proves to institutional investors that they are, without a doubt, a legitimate cash-generating machine.
And this profitability is driven strictly by our next core concept, operating leverage. So what is this? It's a financial situation where a company has a very high proportion of fixed costs relative to variable costs. Because think about it, software is built once and then sold infinitely. So as Palantir scales its operations and their revenue grows, a much larger percentage of every single new dollar flows straight into net profit. Basically, they are tightly controlling their research and admin costs while revenues just absolutely explode.
Section 3. Palantir's agentic AI moat, beyond generative chatbots.
So, how exactly are they pulling off this hypergrowth? And really, what makes their technology any different from every other company out there claiming to do AI? Well, it all begins with ontology, which is an essential English tech term for us to cover. In data science, an ontology is a semantic framework. It's kind of like building a digital twin of a company. It precisely maps all of a company's raw data to real-world physical objects, relationships, and actual business rules. And why does this matter so much? Because it completely solves the single biggest problem with large language models: hallucinations. By forcing the AI to operate strictly within this reality-based framework, it actually understands the actual business. It's a real game changer.
Now, this precise ontology serves as the rock-solid foundation for true agentic AI, and this is the next major evolution of artificial intelligence. Look, generative AI gives you a chatbot that writes text, right? But agentic AI is entirely different. It acts as an autonomous agent that's capable of complex, multi-step reasoning. It can literally monitor a supply chain, detect a shortage, analyze shipping costs, make a complex decision, and then physically execute the purchase order entirely on its own. No human intervention needed.
Let's break down exactly how these components build Palantir's platform. Step 1. Palantir ingests massive amounts of chaotic, raw data. Step 2. It organizes that data within their semantic layer, the ontology we just talked about, giving all that data real-world meaning. Then, Step 3. They deploy agentic AI through their artificial intelligence platform, or AIP, to instantly execute optimized workflows. This three-step process? That is their ultimate technological moat.
Section 4. Government and commercial growth, expanding the ecosystem.
Okay, let's see how this powerful agentic AI technology is actively driving massive expansion out there in the real world. Historically, Palantir was seen strictly as a super secretive government contractor. But today, their revenue engine is fully balanced. In fact, for Q1 2026, U.S. commercial revenue, sitting at $771.5 million, is actually expected to slightly edge out their traditionally dominant government sector at $763.8 million. This really proves their software is highly adaptable and crushing it in the private sector.
And this expansion is being fueled by huge key drivers. First up, their AIP bootcamps. These allow potential clients to test the software using their own data in just 5 days, drastically shortening what used to be a grueling months-long sales cycle. Second, we're seeing landmark government deals expanding way beyond just defense, like a massive $300 million USDA contract to modernize farming data. Third, they recently secured a $10 billion framework with the Army. Yes, billion with a B. And finally, strategic commercial partnerships are embedding their tech directly into manufacturing with Cleveland-Cliffs and accelerating AI infrastructure with NVIDIA.
Section 5. Key risks to consider. The bear case.
Now, to keep this explainer completely objective, we need to firmly apply the brakes for a second. We've seen all the hypergrowth, but as analysts, we have to evaluate the real structural risks threatening the stock. Which brings us to our next English financial concept, stock-based compensation, or SBC. This is a non-cash expense where a company pays its employees with company stock instead of a cash salary. Now, while this obviously saves cash for the business, it's a major bear argument. Why? Because issuing millions of new shares heavily dilutes the overall value of the shares already held by everyday retail investors.
But beyond dilution, skeptical investors are rightly pointing out several other massive risks. First off is the extreme valuation. Palantir is currently trading at roughly 46 times its enterprise value to revenue. Just for some context there, Microsoft trades at under 9 times. So this means the stock is essentially priced for absolute perfection. Additionally, huge vendors like Microsoft Fabric and Snowflake's Cortex are increasingly competing in this exact space. On top of that, there's been some heavy insider selling lately, with CEO Alex Karp offloading nearly $137.7 million in stock over 90 days. And finally, there's ongoing political friction and pushback regarding data privacy across European markets, specifically with things like the UK's NHS and the German military.
Section 6. Chart patterns and strategy, navigating the technicals.
So, with both the fundamental bull and bear cases clearly laid out on the table, let's examine the actual technical roadmap for investors trying to navigate this earnings event. For our final vocabulary lesson today, let's define the symmetrical triangle. In technical analysis, this is a chart pattern where the price action forms a series of lower highs and higher lows, basically converging toward a single point. It indicates that Palantir's price is tightly coiling, it's consolidating after its massive 2025 run, and is now getting ready for a huge, explosive move, either a major breakout or a breakdown, and it's going to be triggered by this specific earnings report.
Which brings us to this crucial technical trading plan, based directly on that triangle pattern. Analysts are noting a solid buy zone sitting right between $138 and $142, but the absolute trigger to watch here is $146.50. A high volume break above that $146.50 level could send the stock absolutely soaring to a first target of $165. And the long-term bull case? That's stretching way up into the 230s if they truly dominate the agent-to-AI market. Conversely, though, if earnings disappoint, a drop below the $136.50 support level absolutely warrants a strict stop loss to protect your capital.
As we wrap up this educational explainer, we've covered everything from the staggering efficiency of the Rule of 40
to the revolutionary shift from simple chatbots to true agentic AI rooted in ontology, right down to the very real risks of stock dilution and extreme valuation. So, I'm going to leave you with this final, provocative thought. Is Palantir the ultimate core hold for the future of enterprise AI operating systems, or is that 46x valuation simply too hot to touch right now? Evaluate the data, keep a very close eye on that 1460/50 trigger, and as always, trade wisely.